Hello everybody, it's Andrew Pancholi from the Market Timing Report. It's just coming up to the New York market close. It's 5 to 9 in the UK, so it'll be 5 to 4 p.m. New York, 7th of April 2020. I'm going to run through the S&P 500, give you some thoughts on that and the Dow. I'm going to take a look at gold, and we'll also take a quick look at some of the patterns relating back to the 1929 crash, and also I want to give you some top tips that help both with trading, but also the circumstances we're in right now as well. So in the April edition of the Market Timing Report, we had the 2nd to 3rd April as a possible bearish acceleration into a turning point, and then 7th to 8th is the next setup where we could well see a reversal. So let's take a look and see what's happening. Here we have the S&P June E minis, and you can see we did get a sell-off here into the 3rd. It was looking for it to be bearish 2nd and 3rd, not that bearish, but we still did get the turn there, and we've headed up into the 7th, 8th, which is now, and we're just starting to sell off now. So a couple of things to note here. I would have really liked to see the 50% level being reached. Also, let me just back up. One of the other points from the report was that there is a significant cycle for next week. So that can play out over several days in the S&P. And this is a strong weekly cycle, as those of you who've been looking at my work, either the free stuff or from the report, will know I've been talking about this. So I'm expecting a significant trend change. Now, you would have to argue that we've gone up. We could well carry on down, and we've hit the 50%. We need to see a reversal in the making. I would like to see this 50% level hit. So I'm surprised we didn't quite get there. Does that mean we might retest and carry on back up? I think it could well do. This is a 240-minute chart, so it's not over yet. 7th, 8th, the window, or we might see an acceleration down from here. But bear in mind, in context, there is a much bigger cycle next week. So that's the sort of key point there on the S&P 500. Also, for our trading course members, this is the operative channel that we've been working on at the minute, and this is basically starting to show a possible failure. But as long as this level here is not breached, the trend remains up, and of course this is the key level then for the weekly cycle that comes in next week. So this is an important channel there. Similar situation on the Dow Jones E-minis. I've just I know it's not a very heavily traded contract, but again a failure to reach the 50% level from the high to the low is significant there. We're just starting to pull back. Doesn't mean we can't get there yet, but that's starting to look like a reasonably serious pullback. And there again, there we go. There was the low there on the 3rd as we forecast for the US indices. So that turning point came in pretty well. Now here's the 1929 Dow crash chart and the 90-year cycle that we've been talking about. As if you haven't watched the previous Swift videos, this big sell-off and turn down has come in from the 90-year cycle from the 1929 crash and the 180-year cycle from the 1837 to 1842 crash. So slightly different in terms of timing, but in terms of pattern, this is pretty much the same. We've come down here, and we've now, in 1929, we got to the 50%. All the closes were at the 50% level. There were a couple of poke throughs, and then the descent started in earnest. Now, I don't know if we're going to get this or not, but not only is that the first case where we got that, we can also look at the same thing happening over here. So I'm just going to close that one off and add another one from here to here, and just project it over to the right, and you'll see again we came over and made a 50% retracement. So what I'm really saying is that we need to exercise a great amount of caution over the next week and a half, because potentially this, if this market is going to carry on down, I don't know if it is or not. Remember, those of you that have been studying with me and on the course and in the newsletter will know that I don't predict the markets. I'm just trying to get the odds on our side, and we look for these patterns. So what we're really saying is that when we get back up to 50%, we might carry on back up or whatever, I don't know. But we might also see then a prolonged sell-off at the beginning of a bear market, and that's the scenario that I'm kind of favouring. So be advised, if you look at this as a fractal pattern, this is pretty much what we've seen so far. We came up to the 382 and we've actually carried on through that and got on the way up to, we're just shy of there right now in this fractal pattern. So just be aware of that pattern forming there, and that's why we need to be very much on our guard for next week. I don't know if it's going to collapse, or if we go into a low for next week, we might see a major low and a significant rally begin. I would argue that a rally has actually begun over the last few days. So again, just coming back to this chart here, looking at the fractal patterns that I was talking about, just to recap, we did see this, a pullback there. That was just a 382 pullback there, all the way back down here. 382 here, which sort of didn't really hold, and now we've come back up. Are we going to get to 50%? If we fall short of here, that's a sign of great weakness, by the way. Now, I want to take a quick look at gold. Basically, we have some very long-term cycles coming in for this month. They could transition slightly into next month. And what you'll see here, all the charts, the detailed charts are in the report, but I just want to share this. This is a pitchfork setup as shown in the course, from the low here in 76, the high in 80, all the way down to here 2001. That projected this high here. Let's make it a little easier for you to see that like that. So this is a very, very valid geometric setup. It caught that exactly. And what we can also do is take that same line there and project it off that high there, giving us this point here, and taking the halfway point. And if we look at the halfway point, you can see that we have got some good, we got a major high there and a significant sell-off. So we've got through here, we have sliced through that. We're trading slightly, well, we traded above it yesterday. We're back down towards here. I think you need to be on alert there for a potential high in the making. Again, this is not trading advice, this is educational. And basically, I generally believe, given the proprietary time cycles we've got, that this is at a significant turning point. Now, I want to provide you with a tool that helps, that I'm hoping that will help you prepare for what you're in already. A lot of people, we are having challenges with work, families, big shocks to our environment from what we were used to only a few weeks ago. But it also applies to trading. And so I just want to run this past you and offer it to you. And it's called the Sarah cycle. And it's related to how things, when you get a sudden external shock, how you can deal with it. And not just deal with it, but how to understand the process that most people go through. And this can apply to something very small, a small trivial event or a phone call that occur in a day, or it can apply to a major life event. And I also put it down to sort of, I show people this in trading when they've had trouble with trades or taken losses, or something hasn't gone to plan and they've had a big emotional reaction. So Sarah stands for shock, anger, rejection, acceptance, and help. So what happens is that we have a big shock. Well, right now the world is in a big shock. And we've got this virus situation that's deflected people's livelihoods, their income, their health. And basically, we are still probably in the shock part of this cycle for the most part. And the next thing that happens is we lead to anger. After the shock, we get this anger thing, and anger is not a good thing. So globally, when we get a big geopolitical event, shock leads to anger, which can lead to a degree of geopolitical uprising and tension. And then let's go back to the personal case. So you've had the shock, you're angry about it. Why did this happen to me? That's the rejection side that's coming in. You feel rejected. And this is all part of the process of, the process of processing it all, as it were. You get this rejection feeling. And then once you go through that, you finally realize, well, it has happened. This did happen. I was angry about it. I was rejected, but I've got to come to terms with it. And that's called acceptance. So you now understand where you're at. And that's when you start seeking help. Now, this can be self-help. It's like, okay, I've got to get my act together. And look after, just help others as well. So basically, this is the Sarah cycle. Think about this, because we're all going through this, and for the most part, for the global world, for the whole world, we're still in the shock part. We've got yet to see anger. People are getting angry. You can see it in the news. we haven't really got to rejection or acceptance or help yet. And that's all what we're going to work through. But if you know this cycle exists, you know these phases are going to come up. Now, as you know, primarily I work with traders, and in this case, you've had a bad trade. Maybe you put a trade in and you didn't have a stop loss and you took a big hit. So there's a shock and you get angry. You want to throw the phone down, you get cross with somebody, and you think, why me? I've just blown up half my account. Why did this happen? And then you accept it. You finally get around and say, well, you know, that's it. That's the fact. I've blown up my account or whatever, or I've just had a bad trade. And when you accept it, it might well be that you just say, all right, that's it. I'm not going to do that again. And you go and get help. So where do you get help? You get help either by saying, actually, I'm not going to do this again. You can walk away from it. Or you can say, I'm going to get myself more education and learn those techniques and make that learning my own. So folks, just run that past you. I hope it helps. If it's helped one of you, out of the many of you that watch this stuff, I'd be very happy. So spread this around, learn it, and because it will help you deal with things. You know that there is light at the end of the tunnel. Just like I've told you in previous videos, we are in a 90-year cycle. We did come out of the depression. They did come out of the 180-year long depression. All these things get resolved, and just like we talked about the 9/11 cycle as well 18 years ago, how these virus cycles repeat. We've come out of them previously, we will come out of that, and this way, when you get a shock, it can be you're going to come out of it using the Sarah cycle. So I hope that helps, and I'll speak to you soon. Thank you so much.